Moving on from that, the other big event risk of the day, of course, is the RBA. We'll bring in James Gerrish from Shaw & Partners now, who joins us live. James, pleasure to have you on the show. Will the RBA drive markets today? We are expecting, obviously, a cut, but the devil will be in the detail.
Yeah, good morning to you, Ingrid. Yeah, the RBA will be in focus this afternoon, half an hour before the Melbourne Cup jump. So a cut of 15 basis points is pretty much priced in by markets, taking the cash rate down to 10 basis points. So the main focus is going to be whether or not they'll put out a more formal quantitative easing statement, suggesting that they're going to keep the buy longer dated bonds, so keep the long end of the curve lower for longer, and that's going to be the key to market. So I think they probably will. I think there's been enough rhetoric around this unconventional policy from the RBA that it's now time for them to step up and actually go through with something more formal in that regard, Ingrid.
All right, so I guess we'll see what happens. I guess when we're watching markets at the moment, James, I mean, what are your thoughts? Because we've got a lot of event risk this week. Obviously, the US election is the big one tomorrow. Are you cautious in, investing right now, or are you sort of trying to look past the noise?
Yeah, it worries me that the majority of commentators out there are suggesting that whatever the outcome of the US election, that the market is likely to rise. We just had, we've had many commentators suggesting or positioning that way. So I think that concerns me a little bit. You look at asset prices around the world, and they're not pricing in a lot of event risk around the election. I know we talk a lot about it, but asset prices aren't actually pricing that in at this point in time. So you look at the US 10-year bond yield is continuing to tick higher, even in the face of rising case counts, the upcoming US election. You'd think that money would be sort of piling into the US debt markets as a safe haven. US stock markets have rallied overnight. I know they fell 5% last week, but they rallied overnight ahead of this US election this week. So volatility index is elevated, but not overly elevated, etc. So there's not a huge amount of clear fear playing out in the market at this stage. I think the market is latching on to the expectation that the result, if it's clear, will lead to further stimulus on the fiscal side, that is, and combined with the monetary policy settings that are being rolled out from central banks globally, that's going to be enough to support asset prices. So I think the market's positioned around that for now, Ingrid. But again, I'd be cautious leading into this US election.
Okay, so any sectors in the Australian market that you're watching in particular to outperform from these themes?
Yeah, so I mean, what the RBA does today is going to be really central around the sectors to be in and the sectors to avoid in terms of the market. Collectively, from a bigger picture standpoint, equities will benefit from more unconventional monetary policy. So, long end rates at the long end of the curve going down is supportive of asset price valuation. So obviously, stocks collectively benefit from that. We've seen that the huge support that quantitative easing has provided to US stocks. They've rolled out quantitative easing over in Europe through the ECB. We haven't done that here in Australia. So, it's going to be supportive of stocks. You think of the largest sector on the Australian market, the banking space. Lower interest rates are a negative for bank margins, but they do support the broader economy. And we're starting to see an improvement in the broader economy. So, banking stocks as one have mixed impacts from quantitative easing, but overall, an improving economy will lift the stock market, and I think it's a positive overall.
All right, James. Well, there's so much to watch, of course, today and in coming days. We'll get back to it. Thanks for joining us here on the show.